All right, guys, good evening once again. I decided to do this video on to serve as a recap to the first meeting that we had. So those of us who really missed it because of network challenges and other reasons can come a bit closer to the level of knowledge that we have acquired so far. So yes, the last time when we met, we talked about how to get familiar with the centralized exchanges. We looked at TradingView as a platform, a website that you can get access to all financial instruments that you want to trade. We looked at how to identify trends. We looked at the three basic trends, which happen to be the uptrend. We looked at consolidation as a trend or sideways. When we talk about consolidation or sideways, is a type of trend where we see that for that particular asset, it's just almost like a stable project. All right, the price action, you are not seeing it going that up or coming down. It's like a zigzag or a wavy pattern. All right. Then the uptrend is the kind of trend where we see that there is a high projection. It is going up. It is going up. If you check it for 4-hour time frame, 2-hour time frame, 1-hour time frame, whatever time frame you look at, you can see that that particular asset is going up. All right. Then we saw that the last trend is the downtrend. The downtrend, which we can say that all the signs point to the fact that that particular asset is, coming down. All right. So quickly, let's take a trade and see if we can identify some trends. All right. So let me look at AVE. All right. Let's go to the trade for AVE. Okay. Now, if you look at AVE, all right, this is 1-hour time frame. In the 1-hour time frame, I can say that this is an uptrend. All right, that is an uptrend. And let's see if we can. Good. Then this is also a downtrend. Okay, that is a downtrend. From here to here, it was an uptrend. All right, good. That was also an uptrend. Then, we can as well see that this is also an uptrend from here to here. All right. Let's try and identify a consolidation trend when it consolidated. So this we can say is kind of a consolidation of a trend. All right. If you look at it, it's really not going up that much, and it's also not really going down, at least for the 1-hour time frame. All right, for the 1-hour time frame. So this is a typical trend that we looked at. Okay, we also looked at support and resistance. We talked about support and resistance, and we said that wherever on the chart that you see that at least minimum of 2 or 3 candles, all right, rest, that is the support. So this can be a support. Why are we saying that? There was a candle here. Okay, there was another one too here. okay, and there's this one too. All right, that is a support. For these ones as support, all right, we can get their resistance somewhere here, all right, because we can get a candle here that went that far and it was rejected, it came down. Here it was rejected, it came down. Here too it was rejected and it came down. All right. If you look at from here to here, that's also a resistance. We have here 2 3, you can get resistance there. Then the support over there is somewhere down here. Because I'm using my phone, that is why I had to get it this way. Then we can also, there is something I also want to draw attention to. If you look at this, okay, from here, from here to here, all right, we can see that there is a support. Support 1, 2, 3, you can even get 4. Okay, that is a support. All right, and that support is kind of a slanted one. Is going up. Okay, so this is a lower support. This is a higher low support. Okay, and this also another higher, you know, support. Okay, higher low. All right. Okay, then let's also look at, let's look at a resistance. Okay, a resistance that is also slanted. We can have this one here, 2, 3. Okay, so resistance can also be slanted and, you know, kind of a drop down. All right, so it is our job to be able to identify the resistance level. All right, it's our job to identify the resistance level. Some people prefer to use the line. Some people prefer to use the line. If you are using the line, that can also help you to get a clear view of your support and your resistance. So here clearly we can see our resistance, we can see our support. All right, and when they are kind of like this, it's also convenient to see your support and your resistance. All right, this was a downtrend. This is a downtrend that we are seeing, a very, very sharp downtrend. Anybody who caught that trade and shorted the market would have made a lot of money. All right, now let me tap on the time here. All right, and then change it back into candles. All right, so let me go to 15-hour and 15 minutes, and I'm back to, all right, the candles, because I like to use the candles. Right, so that is that for trend and support. All right, trend and support, as well as resistance. Okay, now the next thing we looked at was that the basic of trading, as far as spot trading is concerned, is that we look at where the support is. We look at price action at support level and we buy. Then we try and identify the price action at resistance level and we sell it there. The difference is profit for us. So always wait for the market to come to you and you buy at support and sell at resistance. That is a key that we don't want to miss. We also talked about the fact that in any trade that you want to enter, ensure that you have your stop loss and your take profit, instituted. All right. So, for example, this trade, if I want to take this trade, all right, Aave is currently at $383.73. All right. Let me look at the chart again. Right. If I look at this, okay, based on only support and resistance, I can see that this, all right, is kind of at a support level and it's trying to bounce back depending on the fundamentals that I am suspecting for the market. Today BTC has been hitting really hard. The market has been that hot. BTC got to a new all-time high of $107,000. All right. So if I want to enter here, all right, I know that the resistance at the 15 minutes is $399.85. All right. And the support I am seeing, okay, the support is somewhere here, all right, which is 381. Okay, 381. All right. So that said, I can come a bit lower. Okay, I can come a bit lower here, 378 as my support. Okay, or stop loss, not my support, my stop loss. All right. As for the support, we are already almost past the support, because if you look at the current price here, all right, 384, 385, that's okay. Ideally the support should have been somewhere here, which is 381, 381. All right, that is the entry or the support. Yes, the entry. Okay. But our stop loss should be below the support. The stop loss should be below the support. So I am trying to make my stop loss somewhere here, which is 378. Okay. Then my take profit could come as far as here. All right, 394. All right, 394. Because definitely this wig, okay, will be eating again. Right. So when I come to the trade, I want to buy this. Remember, this is sports trading. All right, this is sports. So if I want to buy, my stop loss, okay, my stop loss is going to be 378, I think. All right. And I want it to trigger at 379. Trigger at 379 and be out at 378. All right. Then my take profit, I want it at 390. I think it was 94. So 394. Then how much am I buying? I'm buying, let's say, $14 of Aave. All right. Buying, let's say, $14 of Aave. So let's buy this. Okay. And our order is created. Our order is created for Aave. So if I go to our holdings, if I go to holdings, I have Aave bought. All right. And so far it's not doing well. We just bought it. All right. If I want to sell it, okay, quickly go back to the trade, go to sell and then sell it back. But remember that it's an open trade that we instituted a stop loss and all that. So it will definitely trigger. All right. Okay. So let me sell it for the purposes of our presentation. Let me sell it back and okay. I think it has not. Okay. Let me cancel the trade and then really pick a sell price and then sell it to. So this one, the very first one in the green, and then let me sell it to that person. All right, so it has been triggered. It's been successful, and we have our $25 again. Right. Then we looked at futures. Futures. Let's talk about futures. We looked at futures, and we said that with futures, the exchange can give us a loan or they can give us a leverage to work with. On spot trade, you don't have a leverage. Your leverage is your capital or your margin that you have. All right. The first thing we talked about on futures is the fact that with futures the risk is very, very high. So you have to be very, very careful. Why? The first thing on the futures platform, all right, is to understand what this cross means, to understand what this 20x means. All right. So let's talk about the cross first. The cross means that the money that I have, first of all, let me transfer my money from spot to futures. So my money is on spot market. Let me transfer it to futures. So I go to transfer, all right, and I select from spot to futures, and I select maximum or whatever amount I want. So my money is now on futures, the futures side of my wallet, right? So now let's go to the futures trade. Now that I have money there, the cross means that for every trade, my capital that I have, $25, for every trade, if I select, let's say, half of my money to be used for the trade, if I select half of my money for the trade, all right, and that half is not able to service the trade and my half is finished, the trade goes against me, and the half, which is about $12 or $13, is done finished. The remaining money that I have cross over into that money and use that money to service the trade. That is the meaning of the cross. But you and I, we don't really have that much of a liquidity. So always we try to play it well. So we put it at isolated. What isolated will mean is that every trade that I want to enter, we set the money that we want to use, the margin that we want to use. All right. We set it up. Once we set it, then we can use that money. All right. The next thing, and if you use half to take that trade and the trade goes against you and that half, $12 or $13, is finished, that is it. Your remaining $13 or $12 will still be in your account. Nothing will be, nothing will happen to it. All right. But then the next one is the 20x. That is the leverage. That is the leverage. What it means is that whatever amount you put it at, if it is at 7x right now, if I make 1%, it means that I am making 1% times 7. If I put it at 20x, it means that 46x, it means that I'm making 46 times what any percentage that I make. Whoever is on spot markets will not get that multiplier effect. Okay, that is the meaning. So let me select an asset. Let's say the last time we use H bar, right? H bar. So let me still use H bar today, and let's see how H bar can help us. All right. So with H bar, I'm going to select times 8 and then confirm. All right, that is the multiplier effect. Okay, the multiplier effect. Then my trade is on isolated. I'm not using cross mode. I'm not crossing into my margin. I'm using isolated margin mode. All right, so always ensure you are on isolated. Your leverage is reasonable. 8x is fine. Okay, I can even come to 4x. All right, who knows, because I have not done the analysis really well to enter the market. Then the next thing I'm going to do is to slide the amount of money that I have that I want to use. So as I drag, okay, check here. As I drag, check the cost this side. You will see my part of my money that I'm using to service the trade. All right. Okay, so let's check it again. As I drag it, sorry. As I drag it, you see it's going up, it's coming down. So now that is on $13. That is the money that I want to use for the trade. All right. Now I put it at 4x. Let me increase it to 9x and confirm. All right. Let me again change my slide to $10. So this time, if I make 1% gain, it will be 1% times 10 times 9. If I make 1% loss, it will be 1% times 9 downwards, because it's against me. The next thing is to set my take profit and my stop loss. Always remember to set your take profit and my stop loss. So I'm using the price to determine my take profit and my stop loss. I have not done the analysis, so I'm just making some guesses. I want to take profit at 0.29. That is where I want to take my profit. And I want to take my stop loss, if the trade is against me, 0.280. That is where I want to take my stop loss. All right. Then this time, I am not shorting the market. I am longing the market. This one, the buy here that we are seeing, the buy means that you are anticipating that the price will go higher or go up. So whatever percentage it does, you are making money out of it. Then the sell means that you anticipate the price action is going to go down. All right. And so if it's indeed going down, you will be making profit. All right. So let me place my trade and let's see. So my trade is successful. No, it's not successful yet. It's not successful because I didn't really select the limits order that I want to. All right. So it's not successful unless we wait. It wants to be successful at 0.28521, but it's currently at 0.28560. So we wait until it gets to 21 before my trade will be successful. So let me cancel it. All right, let me cancel my trade. Good, and start again. So let me drag. I am using $7 now. My take profit is 0.3. Okay, 0.3. My stop loss is 0.27. All right, and I want to enter the market at this price, 66. So long it for me, and I am successful in the market now. I'm successful. This is my position. All right. This is my position. These are the open orders, so that when it gets to my stop loss and my take profit, they will be executed. All right. You can see stop loss order and the take profit order. When it gets there, it will hit for me. All right. But the open position, I anticipated that the price should be going forward, but it is not. It is rather coming down. So I have now lost 0.56%, which is about 0.04, okay, percent. Right now, 0.05%, I'm losing money. So if I'm not happy with the trade, let me cancel it. All right, and I can cancel everything. You drag everything, and then I cancel the trade, and I've canceled the trade. Right. So it's not difficult, it's not rocket science. The most important thing is to get your entry right. And your entry, you can always get it when you study the charts and analyze the chart well. We'll go deeper into the charts, and I'm hoping that as we are really going to enter into the bull run, signals upon signals, back to back, I'll be dropping signals on our page, and these are tried and tested ones where I will really analyze the chart together with some mentors, and then we give you some of the signals. So get some capital down that we are going to use for various trades, and trust me, we are going to make a lot of money from the market. All right, I will end here, and if you have any question, bring it up and let's discuss. All right.